Good afternoon, everybody. Scott Riley, the Market Update Desk, February 13th. Wanted to go over a couple things yesterday that happened and information on today. We didn't get a chance to do an afternoon update. So I want to break down some of the CPI data that came out yesterday. Now, headline CPI came in significantly hotter than expected at up 0.5%. The market was expecting 0.3. What that did is it moved the year over year CPI from 2.9 to 3%. That's kind of an important psychological number, the 3%. Within these categories, energy rose 1.1%, and that accounted for a lot of the headline increase. And food also was increasing by 0.4, which did not help. The core rate, which strips out the volatile food and energy, increased by 0.4, which was double what the market was planning on, and year over year increased also 0.1 from 3.2 to 3.3. And that was 0.2 hotter than the market was planning on, which was 3.1%. Used cars, used cars and motor vehicle insurance actually both rose by about 2% month over month. And again, those were significant impacts on it. Now, when we dove deep into the CPI report, what we noticed is, when we get to the January report, there's benchmark revisions. So what we dug into is saw that they updated revisions to the shelter cost in previous months. And that accounted for a large portion of the unexpected 0.5% increase. If those revisions weren't there, we didn't actually have a bad month. So that actually significantly affected both headline and core. So those are very important aspects to look at as we're going through this. Those benchmark revisions did play a significant part in to what we saw. Now today we saw the wholesale side, the PPI or Producer Price Index, that also came in 0.1 hotter than expected. But again, that unexpected increase was from some benchmark revisions. When we look at it, PPI headline monthly rose from 0.2 to 0.5, and the headline year over year rose from 3.3 to 3.5%. Core monthly was revised from 0% to 0.4 in previous months, which brought the year over year from 3.5 to 3.7. So this morning's report showed that wholesale inflation rose 0.4. Like I said, 0.1 hotter than what the market expected at 0.3, and rose to 3.5%. I'm sorry, year over year PPI remained at 3.5%. And that was because the December report was revised by 0.2. Core rose 0.3, which was pretty much in line with the expectation, and year over year did inch up from 3.6 to 3.7. Energy prices were kind of one of the main culprits. That rose 1.7%, while food rose 1.1%. Eggs were 44% increase on the wholesale level. Now, granted, that's one segment. It didn't have that big of an impact on the total, but it does show where that is giving some challenges to the market. When we look at the technicals, yesterday, we broke above resistance level on the 10-year bond. Now today, once the market started to absorb the CPI report yesterday and today's PPI report with these important benchmark revisions, which accounted really for the higher than expected number, the market's kind of clawed back the losses from yesterday almost to an exact level. So we're basically flat from where we started on Tuesday, which is great news. The important thing is a lot of the data that flows from the PPI report flows into the PCE report in another week and a half. So we do have some hopes that we get a little bit better PCE or personal consumption expenditure inflation report than what the CPI and PPI report gave us. So we also had yesterday a 10-year bond auction. It was neutral, nothing great. Graded about a C-. Today we get a 30-year bond auction, so we'll see what the appetite for the market is with that. Also later today, we do get another news conference from Trump, so we'll see how that affects the market. Every day There's the geopolitical aspect, which creates volatility in the market. So we do have a lot going on right now, and it's important to understand the market and connect with experts like myself that can help explain it, guide our borrowers through the market forces that are happening so that they can make educated decisions on moving forward. Give us a call, the experts at the Market Update Desk, 616-293-2189. We are the original singular market news source for West Michigan. Have a great afternoon.